Officially, good morning, happy Monday. Welcome to Market Watch Group's Monday Market Kickoff. My name is Scott. I will be your host. As always, remember that what we do is for education, illustrative purposes only. Nothing we do or say should be construed or considered a recommendation to buy or sell any security or financial product. We're not brokers. We're not advisors. Yada, yada, yada. Okay, we're already talking about the futures, which are up, and there's the news, protests, geopolitical escalation, conflict in the Middle East with Israel. I mean, it's not great, but what do you see the market doing? Holding up. Who's requesting permission for fireflies? Granted. Okay. So we'll look at the economic calendar. It's pretty light. We have the Fed this week with no expectations of anything interest rate related, but certainly we want to hear what their verbiage is. And, you know, certainly conflict in the Middle East that puts upward pressure on oil prices is not conducive to prices coming down from an inflationary perspective, right? At any given time, energy contributing approximately 30%-ish to inflation. So, yeah, that's not helpful when other things seemed to have been more helpful. Mindset for open trade. Well, if it's open, except for if you are carrying a measure of a hedge still, then I would imagine you'll be pretty happy or likely to be happy because it's probably a bullish trade that you're still carrying. And futures look pretty good. So, yeah. We'll see, though, obviously, right? We don't just react to the Monday morning futures. We'll watch it open, see how it goes. The opportunity list was strong. I was just looking at it. 1, 2, 3, 4, 9. It's 20, 22 stocks. Anytime there's that many, I know I'm feeling fairly bullish, or I wouldn't have that many stocks that looked good for opportunities. So that's how I feel. That's how I see it. Give me your thoughts. Let's get to it. Let's get to work. Here's the posture. So last week we were at a 3.5. What happened? Volume, as expected, dropped. And it's likely to drop again next week to a 0, which is predictable, right? We said that's likely to happen. It tends to be a contributor at the beginning of a move, and then it just sort of settles in, and then the trend scores have to take over. We need our long term to get up to 1.25, 1.5. We need short term to get to 1.5, 1.75. And then we don't worry about volume at that point. Then we have trend in place. You can see major markets pretty good at a 0.5. We saw a little bit of momentum from the small caps, which is what we need to see if we're going to see that score move to a 0.75. The implication of that is, if I think that score is going anywhere as of right now, I'm leaning more towards 0.75 than 0.25. Why is that important? Because that orients us as to are we oh, the sky is falling? We hear a lot of negative things out there. You're always going to hear a lot of negative things out there. Just they talk about the concept of climbing the wall of worry. Fundamentally, we have a strong labor market, which is producing a lot of institutional money. To some extent, it's a bit of a Ponzi scheme, right? They were Elon Musk called Social Security a Ponzi scheme. The stock market's a bit of a Ponzi scheme. All the new money coming in is what props it up. You just keep replacing old with new, right? You're like, oh, the Dow, we're gonna get rid of its composition of the Dow through the years. Just sort of shifts to whatever's good at the time. Of course, it keeps going up. If it goes down, you get rid of it, and then you grab something new that's going up and you put it on there, and it's always going up, and you always have new money propping it up because there's a whole new. My son is. I'm keeping an eye on it. As of July 15th, I believe, he's eligible to contribute to a 401k. Bam, 10% going in. He lives at home. He can afford it. And just like that, what? New money coming into the market. That 10% is not that much, but it's going in. That goes to whatever company manages. They have that in their coffers. Everybody's contributing. The money's there. Pensions, 401ks, IRAs, 403bs, 457, right? All of these things, the money's there. The institutions have it. So whatever else, if the institutions are like, yeah, something's going on here, you will see the hedging kick into gear. We'll see the VIX escalate, and we'll see the investment activity stop, and we'll see things kind of sideways. Well, we haven't seen that yet. So, Kami's he's suspicious. He's sarcastically doing backflips. Excuse me. I have no problem with sarcastic backflips at all. All right. What else happened? Sector rotation improved. This one was lagging for a long time. And to me, this is actually another sign institutionally of improvement, because it's like, well, the institutions were okay, but they aren't shifting into these growth areas that we're used to seeing. And all of a sudden, what did we see? 6 sectors at or above the S&P. 5 of 6 were growth, and utilities was there. And we know utilities has kind of a interesting, new characteristic about it that comes from the energy usage for growth industries like crypto and AI, right? Where there's such. Anyway, okay. Everything else looks good. 3.5. It's I'm doing more of a soft shoe dance, like a toe tap, like a tap, just kind of doing my thing. It feels pretty good, but I'm not overly happy yet. I'd like to see more. That's how I would. Yeah. And if you saw my cam, I did a little dance, a little shuffle while I did that. It was good. It was amazing. Okay, let's look at some charts. Nobody wants to talk about. What do you see? I see that here's what we've been doing. We've been doing math. You may not have seen it, but we've been doing math on our charts. And basically what we're doing is we're saying that this and then this are just, they cancel each other out, right? And what does that leave us with? It leaves us with this range here. We've gotten through that, and we kind of have this next range here. And you can kind of see like where we are with that, which puts us to what? It's that last range, right? The thing about it is, like, even before things, fell back in February, that's kind of, market's open, up 0.5%, looks fine. We're just kind of in this. I'd still say we're kind of in like this, a little bit of this flag consolidation right now for me. It would have to break pretty hard. We'll see what it does today. maybe this is the bounce, and maybe it's turning up out of it. 613 is the old high. That's probably right around there. Yeah. Is there any historical data on how markets move during military conflicts? Looking at wars in Iraq. I mean, it's hard because I think right now everybody expects this Israel-Iran thing to be over pretty quickly. And I know that maybe was the thought with Russia and Ukraine, but then by the time it's not, then you're war acclimated, and you're like, well, you know, we're in it, like just like they are with Russia and Ukraine, right? So it's hard to know how you would want to, in fact, measure and look for that. Okay. Okay, as far as, you know, what we think about this, yeah, I definitely think there could be entries today. So I'll be looking for it in the afternoon. Yeah, we've seen quite a bit of recovery in the buyers, and they've done everything they need to. If we start breaking these levels, then of course we would be making adjustments along the way. We would be seeing things like the VIX spiking. We would see things like money rotating out or anything along those lines. So far, we haven't seen any of that. Everything looks pretty good. Okay. Let's look at the VIX, though, before we go. Nope. Come on. Just type it in. There we go. That's a tough one. A lot of times when I'm assessing lows, like high or low, it's kind of got to get to the body. Or I mean to the shadow. But it's hard not to argue that this is turning, and maybe not. I don't think, you know, I think it's a little weaker that it hasn't gotten all the way below. So if this ends up down here at the end of the day, I'm like, woo, goodness, we look good, and maybe this thing's going to kind of settle in for another one of these. If we end up back up and then it looks like this at the end of the day, then I'm not quite convinced yet. Then I would want to see it actually take that out. So then I'd want another day and say, oh, okay, now we've done it, and now I think we're heading this way. Yeah, this is it's a couple of things. Number one, we never got back up to this level. Even on this spike, it was a low 20 spike. That's pretty reasonable. And it's already coming back down. So one last consideration to be thinking about, and this is just the devil's advocate side of things. What else sets up potentially when the VIX has any spike like this? Well, the concern is if we come down and then it comes down and then it starts to do this, then we're saying, wait a second, I'm now not looking from high to high. Now I'm looking from low to low. And if this VIX comes down and it doesn't get back below 18, right, and it just kind of holds and then turns, that is a very specific signal for me. 5 weeks out, 5% out of the money puts for a hedge, especially if during this time I'm putting bullish trades on. It's the same kind of thing that happened back in here, right? Where we thought about it. We were like, is it? This one I did. This one never did. Never turned enough. This one did. And I'm still in that hedge. A little piece of it, even right now. It's losing a little bit. That's what hedges do sometimes. It's insurance. Right? It's insurance. But does that make sense? I know sometimes orienting around the VIX is sometimes confusing because of its inverse correlation. But anyways. Okay. No questions? Everyone's feeling good? All right. Well, we have the context. Let's go. Taking it all in makes sense to me. It's all about the dot plot. Jer Bear says. Jer Bear. I do like Jerome Powell. He's no Austin Goolsby, but no, not many are. EU set to accept flat 10% tariff with conditions. Trump organization unveils self-branded mobile phone network. Okay. Stocks bounce back as Iran nerves ease. Oil turns lower. How much did oil give today? Where are you, oil? 2%? Yeah, okay. Okay, fair enough. Fair enough. Did I miss anything in the news? As we said, this week, you've got some retail numbers. Nothing really there. This is the big one. Oh, jobless claims will be on Wednesday because of Juneteenth. Is the market closed on Juneteenth? I mean, it won't impact us either way because we don't meet until the nighttime on Thursdays anyway. So we're still going to meet on Thursday, but is that a market holiday now? I always forget what the market holidays are. Somebody chat GPT it for me or look it up and pass it on to the group, please. Okay. Market is closed. And is that the stock market and the bond markets? Okay, fair. Let's take that into account with exit strategies when we talk about it on Wednesday, then the jump to Friday, the time that you'll lose. Nothing on Friday. Not much the next week either, really. Oh, yeah, Friday next week, PCE. That is actually big. Yeah, there you go, Miguel. Good advice. Good advice. Okay, let's see here. Starting from the top. And I'll denote the ones that are on the list. Apple is not. It's too much chart. Apple is not. You can probably see why. AbbVie is. Looking for. There was a bit of interesting strength in the healthcare sector that we noticed on one of ours. So there's that. Amazon on the list. Oh, setting up. I know some of you like Amazon as well. There's the pullback. It's kind of settling in here, maybe. This hasn't done much yet, but I'd say we're close. Possibly tomorrow, a trade could show up here, depending on how things look. That one's definitely there. APH in it, looking for the recovery here. Looking for this thing to start kicking out of this. So it flagged, turned, and then it hiccuped. But as long as this holds, we'll give the hiccup a day or two. Let's see what happens. Bank of America is not on my list. Caterpillar is on my list, and I have Caterpillar kind of flagging. So depending on where that goes, it's right at the level now. If it finished higher up, I'd maybe think that's something, right? If it finished like that, that might be enough. We'll keep our eye on Caterpillar as a industrial play. CLS, I don't think anyone's left in there. I mean, it worked. It made money. Hopefully. I made some. Some made, others made more if they held on and caught this piece here. Now what? Well, if no one's in it, if you're still in it, I'd be like, ooh, maybe it can. If you're not, what are you thinking? I'm thinking the consolidation's beginning. Is it going to flag? Is it going to pull back? Like, what's it going to look like? I'm waiting for the next trade. But is it on the list? You're wondering? Of course. Of course it is. CME. Also trying to recover from that engulfing. Support's holding up fine. A little bit of a hiccup. If it goes, it goes. If it doesn't, right? Definitely valid to stay in there. COF on the list. Oh, COF. Capital One. With a little mini cup and handle formation on top of the 50. Oh, that's close. That's close. Next stop, old highs, 210. I like that one. That one's certainly on a short list of the opportunity list. Cisco. Oh, Cisco. This is a full-fledged cup and handle. And, boy, if we break that 66, then I'd be looking for at least half. I'd look for about 6 points, maybe 6.5. So that would put us at what, 72? Yeah, that's good. 72, 7 points. I could take $1.50 to get 7, maybe. Cisco's setting up. I think Cisco's looking close. What is everyone thinking about when they see Cisco? Who's with me? Who thinks I'm crazy? Let me know. Bob Walker's with me. I can always count on Bob Walker. Diamonds. John's with me. Lee's with me. Yeah, I liked it. Of course Sandy is. EA, nothing there for us yet. Flex, nothing there for us yet. GE Vernova. I'm kind of thinking about GE Vernova. Like it did this little pullback, stalled, and it's like this is coming out of the hiccup. This is a chance right here to catch it. And if it leaves from here, you're going to look back and be like, yeah, I had a chance. It had a bit of a, volatile entry where it had those. This is almost a tweezer hold, these two here. Not quite, but which is quite a bullish thing. I think this looks pretty good, actually. So run some numbers and see what it looks like. It's moving when it moves, right? All right. Gold. Defensive on the escalation of the conflict. Now it's pulling back as people are less worried about the conflict. Google is looking bullish. I'm still thinking, I don't think, oh, it's breaking out of it. I mean, not yet. Could be. Could be. That's where I'm starting to think about trying to find it. And I think this thing's heading up towards, what would that be? At least this, like, maybe this area here. Yes. Google. I missed the last one. Caught a sweet piece of beta, though. Goldman. Hood. Hood, I'm thinking, is it trying to pop out of this little pennant formation? Strong. It's good stock. Yeah, there's things that we should be thinking about. Howmet. Oh, Howmet's on. If you don't like GE Vernova, this if this holds up. Now, if later in the day this all of a sudden is back down here inside of this again, then it's like that's not really valid. But as we are turning up out of this, and I think I'd have a pretty decent Heiken-Ashi candle to orient around as well. Sure enough. Where would I go? Right under it? No. Go back, find the bodies, and I'm thinking right through there. I don't have to get to the very bottom of this now that I have that. Thoughts? I think this one looks quite enticing. Entry 170, 330. I'm thinking maybe a little under 5 of risk, which would mean I really like at least 15. 15 puts me at 198. 188. Sorry, I'm like 198. No way, Scott. You're not getting that. 188. Yeah. I feel like a 3-1 is there for us if we want it. Thoughts? Okay. Let's keep moving. IBM. Oh, IBM. You're going a little bit too soon, my son. Is that did we flag and we're breaking it? One day consolidations are hard for me personally because I'm always like, oh, I don't know. It's got a lot of momentum. We just did quite well on that one. IWM. I said actually that I might think about a small cap trade, bullish on small caps. So I'm still thinking about it. MasterCard. We were going to get rid of one or the other and we didn't. I'm going to get rid of MasterCard. I'll keep Visa. MasterCard's off the list. We'll keep Visa for now. Meta. Same thing, right? I feel like Google's going to be the way we're going to get to trade. Is this the flag? Is this breaking the flag? Already pulling back in? I don't know. I want to trade it again, though. Oh, Morgan Stanley, you bastard. What do we do with this? Is anyone still in that? I don't think anyone stayed in that one, did they? And now are we like, oh, Miguel stayed in. Okay, well done. I don't know. Financials are kind of getting a little funky. Rolled them. Okay, smart. Microsoft is just kind of grinding in upwards. Micron, strong. We added it. No opportunity, though. Netflix, definitely an opportunity, but it's an expensive stock. Maybe a good spread candidate if you're trying to, keep your capital commitment down. NVIDIA. Oh, Palantir. I was thinking about it for an alert on this one, and it kind of went slow, and now it's speeding up. Of course it is, because it's Palantir. You mighty beast. Hey, Philip Morris, still doing its thing. Still doing its thing. Balance. That's why we look for those types of trades, those balance trades where you're just like slow and steady. Who's in it? Who likes it? Qs look pretty good today, up over 1%. Roblox, son of a gun. I knew it. I knew it. I got to tell you, this was so sweet back here. What a great entry. Great trade. And then it didn't even pause. It just busted for another one. And then it's just like, was that it? And then boom, it's just going to be gone again. Freight train. Woo, woo. Rivian. I don't know. Rivian's not looking healthy. SPY's holding up, looking pretty good. Tesla. Iffy. TSM. Strong. Uber. Someone likes it. Visa. We'll keep watching it, but there's nothing really there. Walmart, no. Yeah, there's some things developing even today, I think. What was our... Okay, so APH is on. PM is on. What are we looking for on PM? 191. $191. That's about here. That's the first level. Monday, Tuesday, Wednesday, Thursday. Hopefully by Thursday we can get... Oh, there is no Thursday. Friday? Book a piece on Friday before. Carry the rest through the weekend. That sounds nice. I'm good with that. That sounds good. Okay. Any questions? Any trades I didn't touch on? This week, record keeping. That's the trading plan. How's your log? 1 to 10. Are you logging consistently? Be honest. Yes. Sandy's a 10. Oh my God, I love this. Miguel's a 10. Kami's a yes. LJ goes an 8. 9. There's an author by the name of Schwager, Jack Schwager. He's very Schwagerly. Jack Schwager. And you might be like, that sounds kind of familiar. He interviewed, let's say. He interviewed all the people to write the books, Market Wizards. So Market Wizards, New Market Wizards, Stock Market Wizards, Hedge Fund Wizards. Phenomenal. I don't know about the new ones. The original New Market Wizards and Stock Market, those are phenomenal. They're great because it's interviews. How did you get started? What did you learn? It's a lot about psychology and discipline and things like that. Anyways, what am I building to here? There's a famous quote from Jack Schwager who says, "Show me a good record keeper and I'll show you a good trader." And to me, it's that simple, right? Because numbers don't lie. If you're trading without your metrics, your KPIs, it's like, if you aren't measuring it, how do you expect to improve it? And that's our theory, is consistent and constant improvement. Our Kaizen mindset requires really good record keeping. So you know how I like to do it. I break it into groups of 25. Very close to statistically relevant, close enough for me. But gives me my data quickly so I can adapt if I need to adapt to make adjustments. That's what's in the logs that you can download from the group, right? They're all just set up. You log it, then section 7, which is the analytical aspect, then the records are done for you. Then you just have to go look at it, slice it and dice it and understand. So there it is. Record keeping, critical activity. It's a require. Don't be a procrastinator. Do not let it go beyond a week. So what you should be doing is logging daily, right? Your pardon me, I need my second coffee. Your daily routines in the evening should include log any trades today. If you put it on, log the first half. If you took it off, but only half, then go log that part. And right, and if you're logging during the week, when you get to the weekend, you're probably only going to miss a day or two, and then you're like, okay, now catch up. Now, this is advice specifically as I implement my own trading due to the fact that I am indeed a procrastinator and always rude whenever my record keeping fell behind. Inevitably, when it fell behind is when something important happened and you really, really need it. That's like the market's watching you. And if you stop record keeping, that's when something's going to happen where you're like, oh, if I would have had my record keeping, I would have seen that. I would have been able to adjust. Therefore, you can't ever not record keep. Okay, that's today. I would say I would put the probability of a trade alert at 70+% probability. I think there's a very good chance one comes out this afternoon. So be aware if you like them. They tend to come somewhere in that last hour, typically around the last half, because it just gives me time to see it, like it, build it, put together all the things to send it out. Okay. Thank you. See you tomorrow night. No, I'll see you tonight. Some of you, let's chat. Let's see what fills. And if nothing fills, let's build some trades tonight to be ready. Yeah, that sounds fun. Let's do that. Good to see you all. Have a great rest of your day. As always, happy trading.